Well, good morning, everyone, and welcome to the March 28th webinar for our Mortgage Quality and Compliance Committee. We greatly appreciate you joining us today. Those of you that receive our email distributions about these monthly webinars, please feel free to share them with your colleagues in the industry. They are free to anyone, and everybody's welcome. If you had it forwarded to you, and you would like to join our email list for these distributions, just let me know. You can contact me at susan@cmba.com. We're going to go ahead and get today's webinar started by welcoming our 2019 MQAC sponsor, the Compliance Group, and I'm going to invite Jeff Flory to tell us a little bit of information about the Compliance Group. Jeff, turn it over to you.
Thanks, Susan, and good morning, everyone. Thanks for having me. And for those of you calling in for the first time, I'm Jeff Flory. I run the sales organization for the Compliance Group, which is a nationally recognized woman-owned business focused on quality control, compliance services, and servicing QC. And with today's conference call, you're going to get some great information on current California legislation and the NMLS conference. And in the wake of Legislative Day, Susan, I'm going to apologize. I'm going to go a little off script today and make this less of an advertisement for our firm and more of a grateful, thankful to you and your team for the tireless work that you guys put forward in making CaliforniaMBA basically the premier state MBA organization. I serve on the National MBA's, you're welcome. I serve on the National MBA's Risk Management Committee, and the issues discussed nationally certainly have an impact on us here in California. But with the CFPB not being nearly as assertive in enforcement, considering the current administration, states are picking up the slack, right? And so it makes your job and your team's job even more important. I also want to make an appeal to those of you on the call who haven't yet gotten involved with the CaliforniaMBA at the state level to do so. By getting involved, you get the opportunity to network with other like-minded folks who care about the direction of mortgage lending in California. And just last week, I had the fortunate opportunity to meet Rosalyn and her husband, Will, who is a wonderful individual, great perspective on this business. And he's been in the business as long as I've been alive. So the perspectives you get from the networking that you do through the CaliforniaMBA are absolutely invaluable. So stay involved, and if you're not involved, get involved. And thank you very much for participation in this committee. And that's my bit. Susan, I'll turn it back over to you. Thank you.
Well, gee, Jeff, I couldn't have said it better myself. Thank you so much. Yeah, we did have a great legislative day this year, which was just last week. Wonderful opportunity for our members to be a part of our advocacy efforts here in our state capital in Sacramento. For those of you who are maybe closer to the East Coast, the National Advocacy Conference is happening next week in DC. Great opportunity to participate in the same advocacy event, but on the national field, and it's also a wonderful experience if you can join that event. A couple of announcements before we start into our content. We have a couple of conferences or events coming up for the CaliforniaMBA. Next up is our annual Chairman's Conference, which is April 7th through the 9th at the Lodge at Torrey Pines in La Jolla. Gorgeous property, wonderful opportunity for the C-level executives of our companies to join each other, have some great content at a beautiful location, and most importantly, network with your peers in the industry. No sales meetings, no exhibit hall, just great content and an opportunity to talk with your colleagues in the industry. After that, we have two networking events coming up. One in Los Angeles on April 11th at the California Club. That is hosted by Dykema. And on May 9th, we have an event in Pleasanton up here in Northern California at the offices of Ellie Mae. So great opportunities to be talking with your colleagues in the industry. If you can make either one of those events, you can visit our website and register for them. I will go ahead and get started with Pat Zenzela. Pat is with KP Public Affairs. He is our state lobbyist in California, led our efforts for a fantastic legislative day, and I want to go ahead and invite him to talk about a few of our priority bills that we're going to be following this year. Pat?
Hey, Susan, thanks. Can you hear me okay?
Yes.
Good. So I'm going to start talking about, actually, there's three bills that I'm going to reference that deal with the California Consumer Privacy Act of 2018. It actually passed last year, but basically won't be fully implemented until 2020. And there's an effort by various business groups, including the California Chamber that we're a part of, to try to clarify and make more workable the act. It is a very complicated and confusing act because it was drafted so quickly. And so three of the bills that we're looking at this year that will be helpful are starting with AB 25. And basically what this bill does is it narrows the definition of consumer under the Act so that it no longer would cover or potentially cover employee-employer relationships as far as all of the privacy-related requirements that the Act would put into effect. And that's very important, because obviously there's a different relationship when you're dealing with a customer or consumer versus when you're interacting with an employee and an employer relationship. And also the bill is intended to at some point deal with, that language isn't in there yet, but deal with business-to-business type relationships, because they could potentially be covered under the Privacy Act. And then finally, the intent is to try to deal with a requirement under the Act that requires that upon the request of a customer or a consumer, you have to provide every specific piece of information that you could potentially have on them, which could create huge compliance issues, and try to come up with a more general requirement so that you can provide the consumer with information as to the types of information that you have potentially on them, but not every specific piece of information, which could cause all kinds of privacy issues if you're sending that kind of information back and forth. The second bill that I wanted to talk about today is AB 846. And this bill is intended to clarify the ability of a business to offer different levels of services or costs for those services or products, as long as that difference is reasonably related to the value provided to the customer, to the consumer business by the consumer's data. So it would allow a consumer to enter into incentive programs if the customer gives prior consent. And among other things, it would allow for the preservation of the ability of a business to offer loyalty and rewards type of programs. Very important, and a potential unintended consequence if this issue, as far as potentially not allowing for those types of programs if this issue is not fixed. And then the final piece or bill deals with information that is considered to be de-identified under the Act. Right now, de-identified information wouldn't be covered, but unfortunately, there's a really broad definition that's problematic in there that essentially it could be considered covered by the Act if information is capable of being associated with a consumer, and that's a really broad definition. So we're trying to create a clarifier that says, hey, it has to reasonably identify or be linked to the consumer in order for it to be covered by the Act. So that's an important change. And then the final bill I want to talk about today, it's dealing with another issue, and that is consumer loans under the California financing law. And this bill, SB 482, is intended to deal with small or mid-size consumer loans, but the original version of the bill actually covered real estate and commercial loans, and that would have been very problematic because it creates all kinds of new requirements for these consumer loans, including just one example as to why it would not make sense for mortgages. 2 days before every payment, a due date, you'd have to send another notice to the customer saying, hey, you have a payment due in 2 days, and here's the details regarding that payment. Just would be ridiculous in a mortgage setting. And that mortgage and commercial were exempted or pulled out of the bill, so it no longer affects those types of products. So that's a good outcome with respect to this bill. That's it, Susan, as far as the bills that I wanted to cover today.
All right, great. Well, thank you, Pat. Really appreciate it. Lots to watch as far as amendments that are going to be moving through the system this year relative to the California Consumer Privacy Act. So lots of information that we'll be sharing through our communications, like our magazine, our weekly videos, and on our website. So stay tuned for that. Thanks again, Pat. We appreciate you being with us today. Next, we'll move on to our litigation update, and I invite Michael Pfeiffer, who is of counsel at Kirby & McGuinn Law Firms. Michael is also the general counsel for the CaliforniaMBA. He's going to be talking about a particular case that's going through the court. So, Michael, I will turn it over to you.
Thank you, Susan. Good morning, everybody. I'm going to talk about the Dusky case and also some of the things that are going on at the Department of Business Oversight right now involving license revocation. So I'm going to quickly do this. Go ahead to the next slide, Susan. The Abdusky case, this is a decision by the U.S. Supreme Court that came out on the 20th of March. It was of particular interest to CaliforniaMBA because we actually filed an amicus brief. We participated in an amicus brief to the U.S. Supreme Court on this issue. And basically, for those who are exclusively involved in origination, this may not be as important, but if you do both origination and servicing, it's helpful. And I want to give you a little bit of an insight, which is that it does protect the non-judicial foreclosure process, which ultimately benefits all of our members. So it's not just exclusively a servicing issue. It has to do with the efficacy of our foreclosure laws and the ability to realize on your collateral in the event of a default. In this particular case, the law firm McCarthy and Holthus was hired to carry a non-judicial foreclosure sale. This arose out of the 10th Circuit, and basically what happened was, they sent the normal letter. The borrower responded to the letter and invoked a Fair Debt Collection Practices Act a violation, alleging that they needed to basically provide information about the verification of the debt. That's a particular provision of the Fair Debt Collection Practices Act. Instead, McCarthy Holthus initiated a judicial foreclosure action. They didn't wait until after that provision of information was provided, and so they were sued by the borrower. The net result is the district court dismissed the case on the ground that McCarthy was not a debt collector. There's a broader definition of debt collector, and there's a more narrow definition of debt collector in the FDCPA, and the 10th Circuit affirmed that. Supreme Court also affirmed and basically said, look, a business engaged in non-judicial foreclosure activities covered in accordance with state law are not debt collectors when performing these services. That's important because basically it goes to the core of the foreclosure process. And if borrowers have the ability to raise FDCPA claims simply because of the existence of a foreclosure, then we would be moving much closer to a judicial foreclosure state. And it was long ago decided in the legislature that that was not advantageous to businesses. It adds tremendous costs to loan administration and also to origination. So this is a very, very good decision by the U.S. Supreme Court. Next slide. I'm not going to go through the description here, just kind of as an explanation of the rationale of the decision. But I just have a limited amount of time, so I wanted to move on to the final slide. Next slide, Susan, which has to do with what's going on with the DBO. Some of you may be experiencing this. I don't know, but in my practice, I'm getting some calls and basically clients coming to me saying, "Look, the Department of Business Oversight is really being aggressive," and this little short brief here will reference some of the things that may be talked about in the rest of our presentation today. Basically, if you're not already aware of it, on your annual assessments, when the DBO sends those out, you have 20 days to pay them. If you don't pay them within 30 days, this statute, which is California Financial Code 50401, basically says that they can summarily suspend or revoke your license. Well, what they've been doing is they've been aggressively utilizing this tool. And in very short order, if you don't pay your annual assessment, they will summarily revoke your license. And without a hearing, and without basically the opportunity to contest anything that's going on, they'll summarily revoke it. And then you have 15 days from that time within which to request a hearing. So the normal due process of having a hearing first and then, the consequence following is reversed. I question the validity, the constitutionality of this, but to litigate that with the Department of Business Oversight is a huge challenge. Most people are not interested in doing that if they're interested in continuing to do business in California. So what you have is the revocation first and the hearing afterwards. And there are people that are getting caught up in this. In speaking with the folks over at DBO, there are a number of people who are late on their assessments, and the DBO has made the decision that it's administratively or for whatever reasons, they're not going to tolerate that, and they're going to impose a consequence for failure to pay those assessments. The significance of this is that revocation issues, and even if you request a hearing, that doesn't suspend the revocation. It doesn't rescind the revocation. It doesn't put a hold on the revocation. Even if you request a hearing, your license is revoked. And that goes on the NMLS. And other states, and I know of at least two, other states take that and they go, okay, you're revoked in California, you're automatically revoked in our state. So it's that ripple effect, and I'm sure we'll be hearing more about that later in our presentation. But I want to make everybody aware that this is what's going on with the department right now, and they're being very aggressive in revoking the licenses of people who are late on making their assessment payments. Next slide. That's my presentation, Susan.
Okay, well, Michael, thank you. This is great information for anybody that is licensed with the DBO. And if you have any further questions about the information that Michael covered, here's his contact information, and he'd be happy to, to provide you some additional details, I'm sure. Thank you, Michael. Very, very helpful.
You're welcome.
And with that, we'll go ahead and move into today's presentation. We have two speakers today, and I'll introduce them both kind of in the beginning, and we're going to have Rosalyn Hardy begin, and then Tim will give his presentation second. So I'll give a little introduction to Rosalyn. Rosalyn is a member of our board of directors, and with over 23 years of mortgage quality control and compliance history, Rosalyn is the president and CEO of QCP Systems, a national provider of outsourcing post-closing quality control review services. Her firm is also a member of the W.E. Hardy Company, a real estate consulting firm where she shares ownership with her husband, Will Hardy, who's president and CEO with over 40 years of real estate and business services in Southern California. Together, they bring 66 years of combined real estate and mortgage industry history. So, Rosalyn, it looks like your slides are advancing on their own. So we might need to, let me give this control to you, and you can go ahead and start advancing the slides and go ahead and start with your presentation.
Okay. Well, good morning, everyone, and I'm so glad for those of you that were able to call in to participate on this, because the conference that we're talking about today is one that I don't normally attend. I attended the first couple of ones that they did years ago, but the government reporting section of our company is actually headed up by my husband, Will. He is the consummate government reporting expert. He eats and breathes government reporting. So he has always traditionally been the one that has attended the conference on behalf of our company, getting the information. But this year he insisted that I come and attend this conference, and I'm glad that I did, because the changes that are coming down the pike for the mortgage industry in general not only just here in California, but across the board, is tremendous. We know that we've had a change of the land in Washington, and we've got different powers to be that are flexing their muscles, and the world of how regulations are going to be dealt with over the next few years. I think we're going to see a lot more aggressive movement in our area in the mortgage industry. So that's why I'm so glad that the CaliforniaMBA is providing this webinar today so that everyone can kind of get up to speed on what's going on out there and hopefully get ahead of the game. So this conference was held in, Susan, it's not advancing.
Go ahead and use your arrow keys on your keyboard.
Mm-hmm. Thank
there you
go. Okay, and so it was in Florida this year. It's a 3.5-day conference. I don't know how many of you are able to get away from your offices for 3.5 days once a year, but I think if you're able to, it's well worth the trip. And so the topics that we want to cover today for you, just a couple of them, for my part that I really focused in on, was the MLO temporary authority to operate. The industry has been after something like this for a while, trying to get the powers to be on licensing to understand that we are a business that needs to be able to move and originate loans quickly, have our MLOs be able to get out there and help consumers with their financing needs quickly, and to have MLOs tied up going through the whole licensing process and not being able to originate loans until they get to the end of it and secure their approval from the state licensing agency was really becoming a problem for the industry. And so what they decided to do was they decided that they would introduce a what they call a temporary authority license. And this license actually can be applied for starting on November the 24th, 2019. But there's some caveats that are attached to this. And that is the fact that I apologize if these slides seem to be wanting to move on their own.
Yeah, I think that there might be a transition in there. Sorry about that. Yeah, I think of you can just keep controlling it there with the arrows.
Okay. The MLO, and this is important, especially for those here in California, and that is these MLOs that are applying for this temporary authority, they have to be W-2 employees. I know that there are many companies here that operate in California have their MLOs on 1099. But if you're going to take advantage of the temporary authority status that is available starting in November, that MLO is going to have to be a W-2 employee. I asked the question because I know how our industry is and how we do things. We look at ways of how we can get around certain situations. So I went ahead and asked the question at the conference, if that MLO is a W-2 employee as they're going through that process and they secure the license, can they then be converted by the company to a 1099 employee? And the regulators said absolutely not. Once they are W-2 employees for your company, they must remain a W-2 employee. And they are putting in place ways in which they are going to be able to identify that and track that and make sure that the MLOs that are operating off of that temporary authority are in fact W-2 employees. And the MLO temporary authority is good for 120 days. Obviously, during that time, they are able to originate loans as they normally would in the state that they have been given that authority to do so. And obviously, the the things that would stop them would be if the states identify that they have any kind of issue with their license. And so you, obviously, when you are bringing on these employees, you want to make sure that you've done some upfront due diligence of their background, et cetera, so that you don't run into any problems as you allow them to go out there and begin to originate loans. So I think this is a good move for the industry that you have this available coming in November. But once again, the biggest takeaway I received from this presentation at the conference is that they want these employees to be W-2 employees. The other area that I wanted to share with you that I got away from at that conference was the whole atmosphere and attitude of the various state agencies that enforce their various laws and regulations over the mortgage origination process. And they are now having a group that they have created through the CSBS that is basically there to see what they can do to help the mortgage industry and help themselves to develop examinations that are pretty uniform across state lines. And they want to be able to have those examinations to be cross-functional in nature. They want them to be digital transformation, as well as making sure that the industry gets involved with them as well. And this was one of the biggest things that I heard them speak about, and that is that they are working toward trying to come up with ways that they can put forth uniform examinations across the board. They want the industry involved at the table as they develop these examinations. And industry self-assessment is key for them because they believe that's going to save them time, money, and manpower if the mortgage industry is actually out there putting in place compliance and QC initiatives that help them to self-assess themselves so that when they come out to do their work, they're hoping that they're going to be in an environment where it's about being trusting but verifying. And one of the issues that they brought out at this conference is that a lot of companies have the misnomer that when they get a state examination, that they are receiving a full audit from that state examiner. And they made it clear that they do not go into companies with the ability to do what we know as an audit. They go in and do what they call an examination, which means that they're looking at certain items within your company. Some I've listed here, basically a sneak peek at what that examination process is about. And those things that they do not look at in your company, they make clear, do not assume because they didn't touch it, didn't talk about it, didn't audit it, didn't examine it, does not mean that you are in compliance on it. They still expect mortgage companies to be doing what they're supposed to do internally to ensure that they are in compliance with all the various rules and regulations that exist out there. There are areas that they tend to focus on when they come into your shops, and I know some of you have gone through these examinations, is that they look at your compliance and internal routines and controls. They look at your information technology and cybersecurity protocols. They look at your policies and procedures. They want copies of any third-party compliance retained audits completed during that review period. So basically, you should be doing internal audits or using an outside company to assist you with that process so you have that documentation. They ask you to list a list of your material third-party service providers so they can see how you're doing in that area. They also always look for that certificate in good standing in various states in which you're doing business the list of services offered and your fees, and always on the list is customer privacy. So those are the areas that they typically look at. But you and I both know that in our loan file documentation, there is a host of all other types of compliance elements there that we must comply with that they're not even touching. So as we go forward here, I really want to encourage mortgage companies in the industry to start being a lot more proactive in their compliance and QC initiative so that we're not always in the reactive mode. And that's what always tends to get us in trouble with the regulations and with the regulators, is because we don't get in front of the train. We're always trying to stop the train wreck when it's coming at us. And so a good QC and compliance foundation always starts with a foundation of policies and procedures. So I ask you, do you have these basic QC and compliance policies and procedures in play in your company? And whatever format that you're using that works for you, everyone should have written, documented for their company a zero fraud policy that applies to all your employees that are working in your organization and originating loans and touching those originations in any way. You also should have QC plans that covers all the different loan products that you offer in your company. Red flag rule has been out there for a while. Everyone should have that codified in a policy as well. The AML prevention plan, which is the only law that exists today that actually requires training be done every year, and as well as making sure that any new employees that are involved in originations also receive that training. You have the SAFE Act plan that you should have in place, your vendor management plan, your disaster recovery plan, which also can incorporate cybersecurity, whatever the case is for your company that works for you. And then your quality control red flags, that's a tool you want to use for your originations, as well as those of you that are doing pre-funding reviews, have those procedures written so that they are available. I am one that has always promulgated and believed that QC plans, policies and procedures, your compliance manuals, they should not just be on your shelf there, able to have someone from the outside, be them a regulator or be an investor or lender asking for it, where you just hand it over and they check it off their list that you have one. I believe that these procedures that you have in place, manuals, they should be functional for your company, that they should actually represent your business model and how you run and monitor your mortgage operation. And they should be used as a fundamental foundation, as a basis for how your whole organization is run. And your employees that work for you in that space should be very familiar with those various compliance manuals and QC protocols that you have in writing. Also, it's important as you get in front of this whole train that we're talking about here, that you do conduct on a regular basis pre-funding and or post-closing quality control file reviews that let you know clearly how you're doing with your loan quality and compliance components. It's not just something that you do just to satisfy a regulator. It's supposed to speak to how you are originating your loans and operating your business. So make them useful for you, not strictly for compliance sake to give to someone. The other thing is, do you use your loan origination systems to the fullest capability and capacity, knowing that you have good data going in so good data can come out, and not only generate reports assisting you with running your operation, but also making sure that that data is able to be useful to you for reporting your MCRs, financial condition reports, your state reporting, whatever additional reports that you are required to produce and generate, if those reports are accurate, completed properly, and are able to be filed in a timely manner. Because as Michael indicated, the DBO here in our state has become very aggressive in wanting their report filed on time. We just helped a client out with that issue because they submitted their data late to us, so their filing was late, and DBO hit them with a $5,500 fine. They did not pay that fine last year. The DBO, the next thing he hears from them just a couple of weeks ago is that they were revoking his license. He claimed he never got the notice. Whatever the case may be, we intervened on his behalf to get the DBO to understand his circumstances and what happened, and they agreed to let him just pay the $5,500 and get his license back. But he has some unique things going on in his situation in his company that we were able to communicate to the DBO. But you don't want to find yourself in that place. So you want to make sure that you are monitoring the data that's going into your systems and that you're able to get that data out. Because this industry now for several years has been delivering to the government your pipeline activity. And that's just critical. I can't express how important that is as the government becomes more and more proficient at analyzing the data that the industry is providing. The other thing that I want to encourage you to do and make sure that you have fully in place, and that's an accounting system that also is fully being used at its fullest capabilities, at its fullest capacity. So knowing that your financial routine is properly managed, ensuring that your company is financially sound, solid, and stable, and supported by financial statements, records, and reports, and also that you're prepared to file your financial information in a timely manner. And staff training, communication with your staff should be conducted on a regular basis to ensure that new information is made known to them and that any identified areas of deficiency are addressed and corrected. And then maintain comprehensive documentation. An audit, guys, is all about you being able to prove what you are doing in your operation. You can be a company that's running the best shop ever. You can stand up and say, I've never had a default on any of the loans I've originated. I've never had anybody ask me to repurchase a loan. I've never had anybody to ask me to indemnify a loan. I've never had any customer complain about me. I've never had any losses. You can say all those wonderful things. But if all you can do is say it and you're not able to produce documentation to prove it, then it doesn't mean a whole lot to regulators. So you must maintain comprehensive documentation that supports your QC and compliance activities, which allows regulators to trust but verify with ease. That's where we want to get as an industry in this mortgage industry, and that is get to the place where we're not reacting to audits and issues, but that we are in front of it, that we know what we're doing, and that when regulators come in to audit us, they're able to say, okay, we can trust you, but we're just going to come in and verify, and they're not living in your offices for weeks and months, but they can get in and get out, and you can get back to your business. The last item I want to just share with you really quickly, and that is the MCR and the MLS 2.0. The NMLS has been working for a while on their latest version of changes that they want to bring into the whole MCR world. But that proposal, as they shared with us at the conference, was about basically making a lot of major changes in that system. But they have had to put it on hold. They figured out that they're not really able to roll it out the way that they wanted to, with all the changes that they want to make sure are functional and working. And also they heard from industry that they really did need time to prepare for it. So they knew they would need to give the industry at least a year heads up before they made the new version effective. So at this time, for those of you that have heard about the 2.0, they have put that on hold right now. They're trying to get everything in play, and then they plan on trying to give the industry at least a year notice that it's coming so that everyone can be ready. The last slide that I have here for you is just a list of all the various presentations that were available to us at the conference that relate to the mortgage industry and what we do. It was a lot. And I'm working with Susan at the CaliforniaMBA to see if we cannot make these presentations available on the CaliforniaMBA's website. So for those of you that want to get access to it through there, you can. But remember that they would only be available for a short time, I think, Susan, and then after that, for membership, they will be available.
That's correct. Yeah.
Yeah. As Jeff indicated to you, for those of you that are not involved in the California MBA or even with your state MBAs, for those of you that may have tapped into the call because you want to hear about on a national level what was going on, try to get involved with your local association. That's important because the California MBA does an incredible job at trying to stay ahead of the regulations and the legislations that come down that may interfere with the mortgage industry's ability to do the best that it can do for consumers that are seeking financing. And your involvement is so important. We want to hear your voice. We need to hear your voice and your involvement in that. So I would encourage all of you to come and join the California MBA and or your local associations as well. So that's all that I have, and I'm going to give some time to Tim.
All right. Well, thank you. And Tim, we'll go ahead and thank you, Rosalyn. Great presentation. We'll go ahead and start off with Tim Lange, who is the founder and chief operating officer at Approved Licensing. Tim has firsthand experience with licensing procedures in virtually every state, along with extensive knowledge of state regulators and their requirements. He was instrumental in the development and launch of Approved, and prior to Approved, Tim spent 9 years working at the Conference of State Bank Supervisors as its Senior Director of Policy, where he focused efforts on policy and system development for state regulatory agencies. And with that, Tim, I'll go ahead and turn it over to you for your presentation.
Great. Thank you, Susan, and thanks, Rosalyn, for that presentation. Again, thanks for the invitation to participate today. Many of you may have heard me over the years on these different CMBA webinars, so appreciate being invited back. Wanted to give you a quick overview of what we want to talk about today. I know we have about 15 minutes. I will go through the slides, and at the end, my contact information is there. So if there's something you'd like to follow up on, or if we don't get too much in depth on and you have some additional questions, please feel free to reach out to me. So as Rosalyn, gave you a good overview of temporary authority to operate, the state examination system, or SES, as well as some of the mortgage call report updates. There were a lot of other areas here within the conference that had over 700 attendees, which also included over 200 different state regulators. I believe every state and I believe even every territory was represented other than possibly New Jersey. But there was definitely a good attendance is always there. There are also some breakout sessions with the Industry Development Working Group, which is a committee within CSBS that is industry focused. And if you are interested in that, I know that they maybe have some open spots. So if you're looking to be involved specifically with NMLS development, feel free to reach out to them. And there was obviously the opportunity to do networking, not just with regulators, but also with your fellow licensees, fellow folks that are in the business, as NMLS has expanded over the past number of years to industries outside of just mortgage. It's a good opportunity to see what's going on in the other areas as well. And with this, I want to start talking about the multi-state licensing process. And while this is something that has been focused primarily on the money services businesses licensees, this is something that I do believe is going to translate into a more uniform process for all the different state licensing areas. So just to give you a quick heads up, the core of this process is really to allow companies that are operating in more than one state to provide an application that's reviewed by one state and then is kind of parsed out to the other states. So what that means is folks that are applying in, let's say, 10 states, there would be a single state regulator or reviewer in charge that will go through the application. Other state regulators that are as part of that application process have agreed to accept the findings from that state regulator generally. And then once it goes through this core process, then can be vetted on the state-specific items. So if you're in Texas and they have a very state-specific form or a state-specific background check that needs to be done, then it would be handed over to them. This is meant to streamline the process for licensing for multi-state companies. And again, while it started with the money services businesses or MSB, I do anticipate that it will translate into the other areas. I think it's one of the areas that the states have addressed in kind of some of the inefficient processes that are out there. While NMLS is great and you have one single source to go to, obviously each state is conducting their own review and you may be answering the same questions on the same documents across multiple states. This is meant to really streamline that process a bit more. And you can see here that they're also looking at, outside of just new application, other ways to streamline the process. So any amendments that you might have, also the surety bonding process as well. And as we said, this has been in operation for about a year, and about 20 states have joined this. Many are continuing to join that on the MSB side, and we'll continue to see that with additional industries as well. Rosalyn did a good job talking about temporary authority to operate. I think that is pretty good movement in this area. As Rosalyn said, a lot of folks have been asking for this, especially on the state license side, to allow MLOs to kind of transfer both from a bank to a non-bank, as well as from one licensed entity to another. And the one thing I would say, and Rosalyn also kind of called out some of these restrictions or prohibitions. I would remind folks that there are a lot of items around this. I know National MBA was instrumental in this passage, this amendment to the SAFE Act, but it is not something that just really allows anyone to, so to speak, come off the street and start working. There are some restrictions around it, and if you are interested in this, I would take a look at the law, take a look at the FAQs that are posted on the NMLS Resource Center. This is going to be available November 24th, which is 18 months after the Act's passage, which is the requirement for it to be effective during that time frame. So it'll be right in the middle of the NMLS renewal process, so it'll be interesting to see how all of that goes. In addition, I would say some of the sessions that I attended on this were pretty interesting. There were a lot of open questions, not just from industry, but also from regulators. How are they going to monitor this? How are they going to police it? One of the enhancements that they will be making to the current system, NMLS, you can see here, there was a kind of a prototype walkthrough where the system will be checking certain items. One note I would make is that not all of the state requirements are part of this overall check process. So there may be some items that states are going to have to manually check as well. But overall, again, a good movement in this area. Rosalyn also talked about the state examination system. Just give you a quick update here. In addition to the overall process to help streamline the exam process, about 30 state agencies have committed to using this within the first 6 months of launch. There will be a pilot that is launched later this year. And if all goes well, as it says, we'll look to go live in early 2020. As of right now, the program is being funded through the NMLS fees. So that's something I think that if that continues, will be a good benefit for industry, given the overall fees since 2008 that have been paid into the system, and I think it's a good use of the funds that have been there. In addition to just kind of general examination process, there are a few items in addition to regular exam that the system will be used for. You can see here posting of regulatory actions, kind of investigations, as well as, which I think is pretty interesting, the consumer complaint section. So this will all be baked into the SES. So it's a little more comprehensive than just getting a notice from an examiner saying, they're going to be on site or they want a virtual exam. So there are a lot of components to it. So I would encourage folks, if you're interested in taking a look at that, to visit the NMLS 2.0 modernization website as well. Moving along here, just talking about exam resolution best practices. Again, one of the more of the policy-driven discussions from the sessions, and Rosalyn touched on a few of those items. Definitely take a look at what the states have learned over the years, and would definitely see how SES will impact the exam resolution process and the like along the way. Technology, as always, was a focus as part of the conference, and I think with the redo of NMLS into 2.0, that's kind of the cornerstone of the redo, so to speak here. I think that the participation with CFPB, who was also in attendance at the conference, continues to show not just the state's dedication, but also CFPB's dedication to technology. I would gather that with the delay in 2.0, there might be some kind of interim steps that may impact some of the items that states want to roll out on this. But again, I think that SES is going to be really a key part of that overall best practices. I'm just going to briefly touch on this. One of the aspects that I think will be coming in the new NMLS or 2.0, a lot of wizards. So there's the temporary authority to operate wizard, there's the control person wizard, there's the license wizard. One of the items that folks always seem to struggle with is, who should they disclose as officers or people who are making decisions? How should they be vetted and the like? And the demo that was given as part of this was pretty interesting. They had a set of questions that the audience went through, and the results were requested. So basically, if you sat there as your company, you were asked a series of about 10 questions or so, and then also identified the individuals you thought should be in there. At the end, when they asked, who received the results that they expected, in the room of about 125 people, I think one person raised their hand. So it's pretty interesting. So again, while they're trying to make these advances in bringing clarity and consistency, all of which are laudable, the technology and the questions, obviously need to keep up with that. More to come on that, and for those of you that are larger operators that have folks changing all the time, that might be something to take a look at. On the state legislative side, I think the big piece was there was relatively little new mortgage-related legislation across the country that's being introduced. A lot more focus on student loan, debt, etc., and just really some rules rewriting across the board. I can again expect a lot more to be coming up here as well in that area as we progress over the next year or so. One other item, just re-engineering non-bank supervision. This is part of the NMLS's or CSBS's Vision 2020 with the states. And again, I think all of the things that we've talked about so far, the SES kind of bringing in technology, are all part of this. There's a theme throughout the entire conference, so definitely something that was reiterated through a lot of the different sessions and even these different call-outs as well. Wrapping up here pretty soon, I just wanted to, again, bring up cybersecurity. I'm sure that's a topic that's always on people's minds. The questions that came up during a lot of these sessions, were, is the mortgage industry really, quote unquote, as sophisticated or have the tools that maybe say, international money transmitters and the like have? I think there are some differences as far as, what folks believe is available, as well as, what they're actually required to do. Definitely around the state breach notifications, those are continuing to be updated, not just specifically within, say, the mortgage law, but also at the state AG level. And again, having those policies, procedures, and then those guardrails in place definitely have been a focus and will continue to be, and NMLS conference was a good forum for that to, again, reiterate a lot of that. So this was the 11th NMLS conference, and I've been fortunate to attend all of them, and continuing to learn more every year as we go. But it was also really the 10th year of the testing and education update. With the passage of the SAFE Act in 2009, with the launch of the test as well as the different education components, the states have come a long way, and I think that's been a testament also to the support from the industry. Uniform state test has been adopted by all of the states. That really alleviates a lot of the burden that prohibited folks from kind of moving into other states as well. One thing that was noted was test performance has dropped. Right now, it's about just over 50% of first-time test takers pass the test on the first time. So definitely has been impactful on the overall process there. But again, folks are taking a look at that, and just a good overall reminder about testing and education and what needs to be done. Rosalyn talked about the MCR, so I won't provide any additional comments on that at this time, but did want to do a couple quick summary items. The NMLS Ombudsman meeting, which is a biannual meeting that's held, that is open to the public, free of charge. You do not have to register for the conference to attend. It is currently chaired by Scott Kriskaden from Alabama. That meeting was held with a number of good topics and discussion for the public. And in fact, just about an hour ago, the NMLS Ombudsman meeting summary was posted to the NMLS Resource Center. Probably couldn't have timed that better. So I'm glad my friends over at CSBS got the memo to get that posted for this webinar. But I encourage you to take a look at that. And if you're not able to attend the conference, definitely the Ombudsman meeting is something to take a look at. And always they try to keep it light and lively. There was an NMLS game show this year that was regulators versus industry. And I will say that industry, of which I was part of on one of the panels, both with Melissa Copel from Loan Depot, Gus from Mayor Brown, and Nancy Weisgold from Alston Bird, we were able to outwit the regulators, and we won. So that was kind of fun.
That must have been funny. Oh my word.
It was great. But anyways, just with that, I definitely encourage folks to, if you have questions on the presentation or what else was out there, feel free to reach out to me, Rosalyn. Take a look at the website as well. And Susan, again, thanks for inviting us to speak.
Yeah, absolutely. Great presentation from you both. I really appreciate your time in putting this information together and really, not everybody can make it to those conferences, so it was great to kind of hear what the hot topics were. We were chatting as a group before the session started, and I noted that, there is, at least from a California perspective, we're still follow actually quite a lot of legislation that relates to the real estate finance industry, but certainly attending a conference like the NMLS conferences allows you to get a finger on a pulse for what state regulators are thinking. And so I think that was really great information to be shared. I have, if you have any questions, you can post them on the questions dialog box on the right-hand side. I will monitor that and see if we have any questions that are coming in. I want to let you know, reiterate that this is being recorded and it'll be available on the CaliforniaMBA website. It's available to everybody for 90 days. And after that, it'll only be available on the members only section of the website. So we will not be sending out the deck, but we will be making the recording available for you to either revisit or you can share it with other of your team members at your companies. So thank you for today's presentation. We're a few minutes over, but I want to wrap with just a reminder for our next month's webinar, which will be on April 25th. We're going to be discussing non-QM lending compliance risks, and we're going to be joined by Kyle Gunderlock with Citadel and Ben Olson, who's a partner at Buckley. So mark your calendars for April 25th. Thanks again for joining us. You have a great rest of your week, and we'll hope to see you next time.